a bit. Matt Orton is with us for now, Chief Market Strategist at Raymond James Investment Management. Matt, good morning. Great to have you with us here on CNBC-TV18. Thank you very much for your time. You know, global markets have been actually pretty supportive, whereas here in India, I mean, I guess there is some election jitters. Just kind of contextualize the global environment, though. And specifically, if you want to comment on these sort of tariff headlines that we heard on Friday that kind of dominated the US session. And we're 6 months out. So this will only get louder as we get closer to it.
Yeah, good morning, Prashant. Great to see you again. And you're absolutely right. I think there's a lot of noise that's going on. You're seeing election noise in India right now. We're going to be going through the thick of election noise probably once we get to the summer, at least into the fall and then November when elections ultimately happen. But the global backdrop is very, very positive. I think what you've seen economic growth in the U.S. remain pretty resilient. And most importantly, earnings have continued to come into the upside. It's been an incredibly positive earnings season in the U.S. And when you look globally outside of the U.S., you're seeing positive momentum in China. There's almost been a floor put in place because of government actions and willingness to step into the market. You're seeing economic upside with respect to Europe. Things just aren't as bad as suspected. And earnings there, again, haven't been as bad as feared. And over in Japan, you finally have inflation, which is positive. And you're also seeing strong earnings and a lot of corporate reforms coming to bear. So investors have reasons to be optimistic. What I've been telling clients, though, Prashant, as I've been traveling, is a big part of your portfolios right now should be about rotation. Right now, it's really important to find ways to diversify your portfolios away from just technology, which was really the only thing that's worked over the past year. But there's a lot of cyclical parts of this market, both in the US and globally, that look very, very attractive. And I've been advising to use weakness as an opportunity to put some cash to work.
Okay, use the weakness as an opportunity to put some cash to work. Is that your view for the Indian markets as well? Because this has been a fairly steady market, but now we have a big election upon us. So for the rest of the year, what's your view here?
Yes, Sonia, you know, I've been a fan of India and investing in India for the past 2+ years, which has paid off quite well. And I have actually been using weakness in India opportunistically because I think once we get past the results on June 4th, I think investors are going to be much more optimistic again. Earnings results and earnings are being upgraded going forward for the rest of the year. There's a very solid economic backdrop, and I think there's going to be a lot of optimism about the future of India, about a developing, burgeoning middle class spending money. So I think you're going to see a confluence of that come together once we get through some of the volatility events. So I think in India, just like the rest of the world, you have to be selective in what you own. There's a number of areas of the market that have run pretty significantly. So you want to lean into quality. You want to lean into where there's margin strength and where you're seeing a little bit of acceleration in earnings.
All right. Hi, Matt. Good to see you in as always. So India appears to be that structural story, and that's broadly the feedback that we get. But talking about the Indian markets, you know, and stocks that you like, I think from the auto space, you like Mahindra and Mahindra. Tell us more about that. And from the aviation pack, I think Interglobe, even at these valuations, you know, it's the largest player. So you're quite bullish out there. Run us through a couple of the stocks you like.
Yeah, absolutely, Nigel. I think on the auto area, I mean, autos have been a big contributor to growth of the Indian market. They've been a bastion of strength. I think Mahindra & Mahindra is a top pick of mine because you've seen margins hold up even as the order books has kind of been going through a little bit of a reworking phase earlier this year. But it has exposure not only to light motor vehicles, to light SUVs, but also to the farm side, which is, I think, going through a period of recovery. So I think when we come out the other side, you're going to see an earnings acceleration there. And again, it's a different story from, say, Tata overall. And when you look to an Interglobe, for example, on the passenger airline side, Indians are traveling. You're seeing more and more Indians traveling, not only within India, but around the rest of the world. And Interglobe has excellent exposure to a lot of that. You're seeing good margins and good spreads with respect to the cost of seats versus what customers are willing to pay. And I think a really positive sign has been their order of a number of wide-body jets that are going to be able to get anywhere around the rest of the world compared to their current fleet, where the longest route's probably 7 or 8 hours. So I think you're going to see continued growth of that company, which already has great exposure to a number of different markets and strengthening margins.
Okay, we leave it at that. Thanks a lot, Matt, for joining in. Have a great week ahead. And thank you for taking the time
You too.
out.
Thank you.
Thank you.